So tonight we're talking about MPC Caribbean Clean Energy. I remember when this company listed. I think this was my first interview on a stock market listing back in like 2019, and now they are reorganizing. What's the deal here? What's going on?
So just before we get on to that point, Kalila, you know, Richard Biles, the central bank governor, had addressed Parliament's Standing Finance Committee to say that, it's unlikely that we're going to see a reduction back to 0.5% in the near future. So that person who are watching the program, should take that into account. So it sounds great that, everybody's gung-ho to see 0.5% again, but we're in a different framework right now. So not likely to see that 0.5% return. And even for July 30 and 31, 31st being the day the US Federal Reserve announces its policy decision, persons are still not anticipating, a cut for that period. Likely going to see it come probably in September, which is the last time that the cut can be done before the US national election. So that's just a quick point on respect to interest rates. Then, with respect to MPC, MPC is not what one would call a simple run-of-the-mill company that everybody understands. So let's break it down a little bit, right? So MPC Caribbean Energy Limited is a listed company, right? That company owns about 85% of a Cayman-based fund called MPC Caribbean Clean Energy Fund LLC. That fund in the Cayman Islands is what directly owns the renewable energy assets. So when you bought into the IPO, MPC would have invested those funds into the Cayman structure. The Cayman structure took those funds and invested it directly into the renewable energy assets. However, it's not appearing to be the most favorable structure. So what has happened now is that last year at the shareholder meeting, they would have now approved, or shareholders would have approved at the time, a reorganization. So what is expected to take place going forward is that these assets will be moved from the Cayman business and moved directly into the listed company, which is based in Barbados, right? So instead of MPC Caribbean Clean Energy Limited, the listed company, only reporting the fair value gain or loss on the investment value of the fund, what instead will happen is that whatever direct operations take place in these renewable energy assets will show up directly on the profit and loss statement or income statement.
Are there any benefits for shareholders from this change?
Massive. So let's put it in a simpler perspective, right? So as it currently stands, we know MPC is involved with Paradise Park in Westmoreland, right? The MPC Caribbean Clean Energy Fund owns 49% of that asset based in the Westmoreland, right? Then you have the other assets, such as for example, the one based in El Salvador, that's a joint venture with Ansa Macal. They have another investment in Monte Plata, which is a solar farm in Dominican Republic, and I can't remember the last asset is somewhere in the Latin American region, but basically investors will now see some derived value showing up on income statement. They'll be able to better value the future cash flows and actual potential returns to the company and potential growth opportunities. Because what happens right now, Kalila, is that MPC Caribbean Energy Fund LLC in the Cayman Islands, it gives a dividend once every couple of years to MPC Caribbean Energy Limited, listed company, and that is what it uses to keep itself alive, in a sense, over the following periods. So MPC has only paid one dividend since listing, and that was in 2019. Now, shareholders are just there holding onto the stock that they don't have a good or sufficient way to value or see what's happening under the shell of the business own activity. And then on top of that, the Cayman structure carry a lot of cost. So at the AGM, one of the representatives mentioned the fact that the savings that they're going to derive from, just getting rid of that Cayman structure, that intermediate structure, is about $350,000 US each year. So while the company itself would have some new costs, it probably wouldn't be as high or heavy as with the Cayman structure. And one part of that whole deal is that MPC's parent company, which has a stake in the Cayman fund, will be issuing new shares to compensate them for, part of that transfer of assets. So it's better for shareholders on the perspective that, hey, can see the assets better, can value things better, can see the direct value of what this underlying renewable energy business is. Because they just value an asset by fair value, profit or loss. Once a year at audit time or end of Q4, you really can't judge what this business is really performing apart from the metrics they give in terms of revenue and EBITDA and what they do in terms of budget. So the documents have been put in escrow right now. They're written on the TTSEC, Trinidad and Tobago Securities and Exchange Commission, to actually, approve the additional listing of shares to be given to MPC Capital's intermediary company, to be listed on the TTSEC and JSE intern, get listed on both markets. And once that is done, the documents will be released and the assets can be transferred effective at that point to the listed company. So
is there a timeline on those listings for the TTSC and the JSC?
Boy, Kalila, the TTSEC is a real drag. That's the best way to describe it. So the notion that they're a better regulator, but the regulator takes very long. So they said at AGM they're looking for Q3 potential end of year, but TTSCC is pretty long. So while they might say Q3, Q4, we have to just wait until we hear the TTSCC put a notice out that, hey, we approve it, can issue new shares, and we can move on. Because according to the original timelines, this deal or reorganization should have been finished by May 2024. But because in several jurisdictions, El Salvador, Jamaica, so many different jurisdictions, it took much longer. So we reached a final stage now to it in the TTSEC. So that's really the last hurdle at this point.